Hello everybody, I'm John, this is Strategic Investing, and today we've got some exciting stuff to go over here. What we're going to talk about is what it's going to take for Xtract One to reach profitability. We'll talk about what it's going to take, how long it's going to take, right? So is it going to happen in the next year, 2 years, or in the next couple of quarters, right? What are we looking at timeline-wise as far as profitability goes, and also what we're looking at revenue-wise, right? How much do they have to be bringing in revenue likely to now actually break even and then move into profitability? And the reason that we're able to now actually talk about this, actually make these projections, things like that, is because of the way that they changed how they report their financials in their last earnings report. And if you guys watched my earnings video, you heard me talk a little bit about this, but let me break this down very quickly here. What we're looking at here, what we get from these financials now that we did not get before, that is extremely important in actually projecting when a company could reach profitability, is the gross margin number. Okay, what that tells us essentially is kind of breaks down what are the fixed costs of the business versus what are the variable costs of the business, okay? It's a little more kind of complex than that, might not be that exactly, but that's kind of a good way to think about that, right? What is tied to the actual, physical product that the company needs to continue to buy in order to continue to sell the product versus what are the expenses that are not really tied to the product, okay? And so what we can do here now with this 67% gross margin that we got in the last quarter is we can kind of now do some math. Okay, how much do they have to be making in revenue until this gross profit is able to cover these operating expenses? That's really what we're looking at as far as profitability, okay? We need gross profit to be more than operating expenses. You always have some little interest income and taxes and other expenses like that, but those generally tend to be much smaller in comparison to the operating expenses. And so once you cover the operating expenses, you're pretty much right there on the cusp of profitability. So really, again, what we're looking at, we just need gross profit pretty much to cover these operating expenses. And now, because we have this margin, right, because we now have cost of revenue here, we can do that calculation and see how much revenue it's going to take, and then we can kind of make some predictions and projections to see, okay, how long do I think it's going to take them to get to that point as far as revenue goes? And that's what we're kind of going to walk through here. And so I've put together this little chart here, this little table, and it's actually kind of a calculator, if you will. It allows us to play around with the numbers a little bit and tweak the margin, the revenue, the expenses, things like that, and really kind of mess around with that and see what it's actually going to take to make them profitable and how long that could take, okay? Okay, so as I said before, basically what we need to do, the first thing we need to do is figure out how much revenue they need to be bringing in based on their current margins to reach profitability. And so we're going to assume, say, just operating expenses stay exactly the same, okay? If operating expenses stay exactly the same, how much money would they have to be bringing in to be profitable, okay? And so I'm going to uncover this square here, this section, and this is what we get here. Based on 67% gross margins, they need to be bringing in about $7.3 million in order for that operating loss to now become an operating income, right? To be profitable. Now, I know what you're going to say, expenses are not going to stay the same. So we have to figure out, okay, what are expenses going to be? How much are they going to increase? And then also, how much would they need to increase revenue then to outpace those new increases in expenses? And so we gotta kind of do some math here. So what I want to do in order to kind of figure that out, I think an easier way to maybe go about this is to kind of project or predict what we think the quarterly growth rate will be as far as revenue and expenses. And then I've set this up here to calculate that and kind of show us what that would represent. Now, obviously, I have revenue growing here at 144% and expenses at 0. That's not going to happen quarter over quarter. I would love it if that happened. You can see by Q2 of 2025, they'd have a profit of basically what their market cap is right now, but that's not going to happen, right? Most likely. So what we need to do is kind of figure out realistically what we think these increases will be quarter over quarter. Now, if we look back at their financials, if we go to, let me scroll down here. If we look at operating expenses and we look at revenue over the last year, let's say, okay, over the last from Q1 of last year to the Q1 numbers that we just got for the current year, right? What we're looking at here is 427. This is in thousands. Keep in mind, okay. So $427,000 to almost $3 million. That's about a 600% year over year gain, which equates to, I think, somewhere around 65% quarterly growth rate, okay? Now, I like to be conservative when I'm doing these estimates here. I really don't like to go, bull case, like everything like that. I like to be a little bit conservative. So actually, let's be very conservative at the start here. Let's put in 30% growth rate quarter over quarter for the revenue. Now, again, that's half of what we've been seeing before. Okay, now let's look at expenses. Okay, how much have expenses grown over the past year? If we look at total expenses, this line here, we're going from 5.5 million roughly to 5.9 million. It's around a 7% increase year over year, which means you're probably looking at really only close to like a 1.5 maybe percent increase quarter over quarter. Now, again, I like to be conservative here. So let's say that every quarter actually we're seeing maybe a 7% increase in operating expenses. We do know they're going to be, hiring sales and marketing people, mostly sales probably. So that's really what we're going to see increase. Probably not too many increases in R&D and general and administrative things like that. But we do know they're going to increase sales. So let's just be, again, very conservative here. And we'll put 7% as the quarterly increase in operating expenses. We'll just add that in here. So you can see, actually, even at this very conservative, in my opinion, this very conservative estimate, you can see how revenue grows over the next several quarters if we're looking at an average revenue growth of 30% per quarter and an average growth in expenses, which is this second from the bottom line here, at a 7% growth rate per quarter. You can see even at that, again, I think pretty conservative estimate, we're reaching profitability here. Xtract One would be reaching profitability in Q2 of 2025. Now, again, these are average growth rates. Obviously, in the last year, we didn't see every time a 65% growth, right? The first year we saw actually probably higher than that, right? And then we saw much lower than that from, the January quarter to the April quarter. Then we got a doubling, right? More than doubling. And so, this isn't going to translate exactly quarter over quarter. I'm not saying, again, I'm not saying this is going to happen. I'm just showing you based on the growth rate what we're likely looking at based on the current margins, okay? Now, if we go, extremely more conservative, right? Say we have 25% growth here, and we're looking at maybe 10% growth in operating expenses. It's a different story, right? We're probably going to take maybe closer to 2 years or so to reach that profitability. We could also, maybe that operating expenses increase is maybe that's a little low. Maybe it increases much quicker. Maybe they're really kind of pushing hiring for salespeople, things like that. We see that 15%. That makes a difference too. You can see how those numbers change, okay? So I made this, the reason I'm kind of going over this is really to show you, based on different things that are happening, this is kind of what it's going to take for them to reach profitability. Now, again, if we go back to what they've done in the last year, 65% growth quarter over quarter, and very minimal, 1 to 2% increases quarter over quarter in operating expenses, you're going to see that profitability reached very, very quickly, right? Again, just going back to that 30%, dropping this down to 7% quarter over quarter, you already have profitability. If you raise that up to, 45% in the revenue growth quarter over quarter, and you get to, maybe more like 5% in increases in operating expenses, you now see by Q2 of 2025, we're looking at a $6.6 million profit for Xtract One. Again, not saying this is going to happen, just illustrating how different growth rates in revenue and expenses, now that we know the margins, will affect this. The other thing that I think is going to happen, and I'll talk about this a little bit more in a later video, but because of the way that their contracts are structured and because of how they recognize the revenue and the expenses related to those contracts, when we see a contract end, and basically when we see the initial life of the contract end, say it's a 3-year contract, and that contract is then renewed, there is actually a higher margin than associated with that contract because the hardware costs have already been recognized, and now only the actual personnel and labor costs of continuing that maintenance and support will actually be the cost of revenue. And so we could actually see, down the road, Q2 of 2025, say even we get this 30% growth rate here in revenue, and we get a much higher increase in operating expenses, the 15%. But, that looks pretty bad right now, right? Still a, $2.3 million loss there. The thing is, though, is if margins even were to increase, let's say, just to 75% versus 67, right? Really only a 8% or 8 basis point, if you will, increase in margin there. That's a much different story, right? That's over about $1 million difference, right? So margins increasing could also affect this as well. Again, we go back to the 40%, right? We're looking at $900, almost $1 million there in profit versus if we had a 75% margin. Now it's a $2.2 million profit, okay? So those margins are gonna be something that we really wanna keep an eye on as well. So again, the reason I'm showing you all of this is to basically say, in order to calculate profitability, what it's going to take and when it could happen, we need to keep an eye on a few main things. The revenue, specifically platform revenue, the cost of revenue, and that'll give us those margins, right? And what their expenses are looking like, right? And so if we have all of those and we start to see kind of a trend, say we start to see something like this in Q2 of 2024, we can go, okay, we got a 40% growth rate in revenue. Operating expenses did increase, though, significantly, right? Or maybe the operating expenses are only up a couple of percent like they were the quarter before. Now it's looking like profitability is going to be much sooner. These are the types of calculations and things that we can do now that we have these numbers, these gross margin, cost of revenue, things like that. And I would be willing to bet, pure speculation here, but I think it's maybe not pure speculation. It's based on what we've seen from Peter, what we know his strategy, his mentality is around releasing numbers and things like that. I would be willing to bet that because they're now giving us this gross profit number, this cost of revenue, things like that, I would be willing to bet that now that they're giving it to us, it's because that Peter is confident that these numbers will get better. They'll either stay the same or they'll get better. He wouldn't come out and start to give you gross margin knowing that next quarter the gross margin is going to be like 57% or 40% and it's going to look much worse. Again, speculation, but I think that's something that Peter would be very likely to do based on what we know about him, what we've seen from him in the earnings calls and things like that. Peter and Karen and the team are very judicious in how they go about, releasing things like that when they're confident, when they know things are going to be good. And so I think we're going to see these numbers continue to improve. And again, now we can actually do this math. And if we see the growth trends that we've seen in the last couple of quarters continue, which Peter and Karen have said that they pretty much expect to happen, we could see profitability very soon for Xtract One. I don't want to, get everybody's hopes up and excited and thinking, we're going to be profitable by the end of the year here. But now we know that it's at least possible, right? And now we know that, based on what we see in the next quarter and the quarter after that, we can actually determine, okay, what is that going to mean for profitability? And I know I'm kind of rambling a little bit in this video here, but one more thing that this allows us to do now is determine, okay, if we think that Xtract One can bring in 5 years from now $100 million in revenue, what does that mean for profitability? We can make those projections and those calculations, and that allows us to really, as investors, see where the stock might be, based on what we think the PE ratio might be, and the growth rate and things like that. So this new way of reporting their financials, I can't stress enough how important it is that we have this new information and what it allows us to do as investors. So I hope you guys found this helpful, showing you kind of this breakdown as far as, what different things affect the profitability and how far out that could actually be. If you have any questions, if you have any comments, as always, leave those down in the comments below. Also, keep an eye out for the video that I will be doing on the contract, again, based on why I think those margins will actually increase. And I'm actually going to break down kind of the difference we could be looking at between upfront contracts and subscription contracts, how that could affect margin, which ones are better for them and why. So we're going to get into all of that in another video. Other than that, I hope everybody has a Merry Christmas and a happy and safe holiday season, and I will see you guys next time.